predicting the stock market. It's almost impossible, right?
Yeah.
Like trying to see the future in a crystal ball. Even with all the AI advancements, it's still a huge challenge.
It really is, and it's fascinating to see how researchers are trying to improve AI's ability to make sense of the market.
Well, this deep dive is all about one of those new approaches. It's a method of financial time series forecasting, and they're calling it a retrieval-augmented system.
It sounds complicated, but the idea is actually quite intuitive.
Okay, so break it down for us.
Imagine you have a super smart AI, but it has no memory of past market events. It's trying to predict the future with only current data.
That doesn't seem very effective.
Ah,
I mean, history tends to repeat itself, right?
right.
Especially in the stock market.
Exactly. So this new approach is all about giving AI that historical context. It's called a Retrieval-Augmented Generation Framework, or AG for short.
Our AG framework, what is that?
Think of it like this. The AI is like the brain trying to make predictions, but it's paired with a retriever that acts as its memory, digging up relevant financial data from the past.
So it's not just about crunching numbers in the present. It's about learning from past market behavior. Like, are we talking just stock prices here?
Not at all. It goes way deeper than that. This specific retriever is called FinSeer, and it's designed to understand the nuances of financial time series data.
Nuances. Okay, so not just matching numbers, but figuring out what, like patterns and relationships that might indicate how a stock is going to move.
Exactly. FinSeer analyzes a wide range of financial indicators, things like trading volume, which tells you how much a stock is being bought and sold.
Right. I've heard of that.
It also looks at things like alpha factors, which are calculations used by Wall Street pros to assess a stock's performance.
Okay, getting a little technical here.
I'm following.
And it even analyzes technical indicators like the KDJ crossover, MCD histogram, and Bollinger Bands.
Those sound familiar, but honestly, I'm not sure I could explain what they mean.
Well, they're basically signals that help analysts understand market trends and make predictions. For example, the KDJ crossover is a momentum indicator. Momentum, so like, is a stock gaining or losing steam?
Yeah, you got it. It looks at the relationship between a stock's price, its highs and lows, and its trading volume. When these KDJ lines cross in a specific way, it can suggest a potential shift in the stock's price.
So it's not just about the price itself, but also about all these other factors that can influence a stock's movement. Fascinating. But does all this actually make FinSeer better at predicting stocks than, say, an AI without this memory?
That's the million-dollar question, isn't it? Well, the researchers put it to the test. They ran experiments to see how FinSeer would perform in real-world scenarios.
What did they find?
They found that when the AI was paired with FinSeer, it was significantly more accurate in its predictions than when it was on its own, even more accurate than when using other, more general-purpose retrievers.
Wow, that's impressive. So what were they predicting exactly?
In one test, they challenged the system to predict the movement of ExxonMobil stock, XOM, on a specific day back in 2015. And get this, the stock was already trending downwards.
Okay, a tough challenge. So did it get it right?
FinSeer really shined here. It analyzed the historical data, pulled up all those relevant indicators, and gave the AI the context it needed, the result. It correctly predicted that ExxonMobil would continue to fall.
And the other retrievers, what happened with them?
They didn't have the same depth of insight and ended up getting it wrong.
Okay, so this FinSeer is the real deal. It's like a cheat code for the stock market. But is it really just replicating the past?
That's a good question, but no, it's not simply mimicking. The AI isn't blindly copying historical data.
So how's it working then?
It's more like a student learning from past examples, if that makes sense. It's taking the insights from FinSeer and applying them to the current situation, making its own judgment calls based on the historical context.
That's really interesting. So it's learning, adapting, not just spitting back what happened before.
Right. It's using the past to understand the present and hopefully predict the future.
So it's using that historical knowledge to make sense of what's happening now. I'm curious, do they only test this with ExxonMobil, or did they look at other stocks too?
No, they actually tested it across a range of different stocks using 3 different data sets, ACL18, BIGI 22, and Stock K23, I believe. They covered different time periods too, from like 2014 to 2023, so quite a broad scope.
Okay, so multiple stocks, multiple time periods. And did FinSeer consistently perform well across all those data sets?
Yes. In each case, using FinSeer led to more accurate predictions compared to using the AI by itself, or even when using different retrieval models.
So it wasn't just a fluke. This FinSeer seems to have a real talent for finding those hidden patterns. Did the researchers notice anything interesting about what kind of information FinSeer was focusing on?
Well, one of the key findings was that FinSeer consistently identified a wider range of indicators compared to other methods.
Wider range, what do you mean?
It wasn't just looking at the closing price of a stock. It was digging into things like the KDJ crossover, MACD histogram, those more technical indicators.
Right, right. Those Wall Street terms we talked about earlier. So it was looking at a bigger picture.
Exactly. And that gave it a much more nuanced understanding of the overall market trends.
So it wasn't just matching numbers. It was understanding what those numbers actually meant in the context of the market.
Yeah, I think that's a great way to put it. The other retrievers often focused on just surface level similarities, but FinSeer really grasped the deeper relationship between those indicators and how a stock might move. It was able to extract meaning from complex data.
It makes you wonder what other kinds of financial data could FinSeer analyze? Could this be used to predict things like interest rates or currency fluctuations, that sort of thing?
I think the key is to train it on the right data sets, the specific indicators that are relevant for each task.
Makes sense. One thing that struck me earlier was that financial data is constantly changing. I mean, the market is always in flux. So how does FinSeer deal with that? How does it keep up with new information?
Well, the system is designed to incorporate new data continuously. So the pool of data sequences it's using for comparison, that's constantly being updated.
Oh, so it's not just stuck in the past. It's learning from the past, but also adapting to what's happening in the present.
Yeah. It's not just retrieving data, but understanding how that data fits into the evolving story of the market, you could say.
That's pretty amazing. I mean, it's almost like it has a sense of time, a sense of how the market changes over time. This research really raises some big questions about the future of financial forecasting. I'm particularly intrigued by the idea of personalized forecasting. Could we see a future where these predictions are tailored to individual investors, like based on their specific goals and risk tolerance?
It's an intriguing thought, isn't it? A system that not only analyzes trends, but also understands your personal investment preferences.
That would be a game changer for sure. It really does feel like we're on the cusp of a whole new era in finance, one that's driven by AI and this power of financial memory. But like with any new era, I imagine there will be challenges. One thing that jumps out at me is just the sheer complexity of the data involved in this research. Building a system that can make sense of it all, that seems like a monumental task.
Oh, it definitely is. Financial data, it's complex, it's multifaceted, it's constantly evolving. But that's part of what makes this research so groundbreaking.
I mean, they've actually managed to create a system that not only processes all this data, but also extracts meaningful insights from it. It's like having a tireless analyst at your disposal, working around the clock to understand the market.
Yeah, and that's the beauty of AI, its ability to analyze vast amounts of data and spot patterns that humans might miss. That's where its real strength lies. And as these systems continue to learn and evolve, their ability to understand financial data will only grow.
This definitely got me thinking about the future of AI in finance. That idea of personalized investment strategies, that's really exciting.
It is a fascinating area for sure, and it comes with both tremendous possibilities, but also some potential concerns that need to be addressed.
Right, it's a reminder that technology, it's a tool. It can be used in many ways. It's up to us to ensure that it's used responsibly and that its benefits are shared widely.
Absolutely. And this deep dive, I think it's given us a glimpse into the potential of these retrieval-augmented LLMs, how they can be used to enhance financial forecasting. We've seen what FinSeer can do, acting as that financial memory bank.
Yeah, it's clear that we're just at the beginning of a whole new chapter in finance. And AI is going to play a major role.
And as we move forward, it's important to approach this new era with a balance of enthusiasm and caution. We need to embrace the potential while also being mindful of the limitations and potential risks.
It really is. There's so much to consider here. It's interesting. This research, they used a relatively small language model, a 1 billion parameter model, which is tiny compared to some of the massive LLMs out there now.
It is, and that's what's so remarkable. The fact that they got these results with a smaller model, it really speaks to the potential of this approach.
Right. Imagine what they could achieve with even bigger, more powerful models.
Yeah.
The possibilities are mind-boggling.
Absolutely. And the pace of innovation in AI, it's incredible. What's cutting edge today might be outdated tomorrow. It's a constant evolution.
Yeah, it's a good reminder to stay curious, keep learning. Well, I think this has been an incredibly insightful deep dive. We've learned about retrieval-augmented LLMs, this fascinating FinSeer system.
And how it can be used to enhance financial forecasting. We've explored the potential, the challenges, the ethical considerations.
It's a lot to process for sure. I feel like we've only just scratched the surface.
Oh, absolutely. It's a vast and complex field.
Well, I want to thank you for joining us on this deep dive into the world of AI and finance. This has been truly eye-opening.
It's been my pleasure. It's always exciting to discuss these cutting-edge advancements.
And to our listeners, thank you for tuning in. We hope this deep dive has sparked your curiosity and left you with some food for thought.
Until next time, keep exploring, keep questioning, and keep learning.